So what does this all mean for you and I? Well, Emma Franklin-Keogh is from Clockwise Credit Union in Leicester and joins us now. Emma, hi.
Hi, how are you?
I'm all right, thanks. Look, you've had an hour or two to sort of digest this. What does it mean to us, do you think?
It's kind of the only way I can put it is a tale of two sides. On one side, if you are someone with savings and it is in that position, it means that you are now going to get more for your money. You're going to be able to get a better interest rate for the savings that you've got. For a lot of working families, however, it's a bit of a different story in that it does mean that you're going to be paying that much more for your mortgage, particularly if you're not in a fixed rate. So if you're in a fixed rate mortgage and you were lucky enough to fix for a number of years, your mortgage will remain the same. However, if you are on a variable rate mortgage, or if you're looking at your mortgage coming to the end of its fixed rate within the next, well, if the Bank of England is predicting up till a couple of years' time, things are going to get a little bit more tricky, adding on extra up to hundreds of pounds onto a family's budget every single month. And at the moment, with that matched with inflation, it's quite a scary time, I think, for a lot of working families.
I keep hearing people say, "Oh, we've kind of got used to low interest rates," and the inference being that we shouldn't have that we should have maybe operated our finances differently. But in truth, low interest rates have been here for the thick end of a decade and a half.
Yeah.
Where do you see it all going? I mean, it can be. Look, I was going to say it will be a massive financial shock to most people.
Yeah, absolutely. I mean, it's another one of those things that's going to, set up a bit of a generational divide, if we're honest, because we are talking about young working families who have a mortgage, who possibly haven't got those savings in the bank, and people that have got savings in the bank tend to be that little bit older. That is a massive generalization. I do understand that, but you look at the statistics, it is going to be a massive shock to a lot of families. And even on the side of things, when you're saying, we shouldn't get used to the interest rates being low, you're right, they've been that way for many, many years. It is going to be a shock to a lot of families. And it's hard to see where it's going to go. At the moment, the Bank of England said they don't expect it to, from the news reports, don't expect it to get over 5%. But still, when we're used to 0.something%, that is a massive increase that's just the base rate. You've got to think banks will probably take it a little bit above that.
What do people need to do, to try to protect themselves from this?
What I would say is one of the things that, I haven't mentioned. I've mentioned mortgages, but also credit card debt. If you do have credit card debt, I would say now is the time to have a look at what you can do with that. It's not always manageable, but if you can pay it down whilst you're still in the situation that it's a little bit lower interest rate wise, that might be an option. Look at your budgets, see what you have that you can pull a little bit back on. I know everyone's been trimming their budgets quite heftily due to the inflation pressures, but yes, budget, see what debt you've got, see what you can do with that debt to look at paying it off that bit quicker so you're not hit by this interest rate hike.
Do you think that banks and other financial institutions will understand the pressure that people are under, or will they be, cold-minded about it?
I think at some point, I don't think anyone's cold-minded when someone is coming to them saying, I have this issue, this is what, I need some help. There are, schemes, there are free providers that can provide you financial advice. If you are in trouble, have a little look online. There are lots of free advice services. it might be something that, that the government might step in, as they did with coronavirus when it came to mortgages. They stepped in and gave that kind of payment break, breathing space, but it's going to take some action from the government to make that happen.
You see, I asked the question really because the basic truth is that there'll be lots of people really quite worried this evening if they weren't already. And I suppose that what you said earlier on is about people, if they can, taking some action to try to protect themselves. The brutal truth is that in many cases people will have already done all of that as much as they possibly can, cut everything to the bone. Where do people go at that point? What do they do?
If you are in a situation where you absolutely cannot manage, I would say to look for the free advice services. There are people that are out there to help. That would be my advice. I always say, look at budgets, maintain open communication with all your providers. When it all goes wrong tends to be when people don't talk about it and don't contact their providers. As long as you're in open communication, then people are generally quite understanding and will work with you.
All right, Emma, thank you ever so much for coming on the show. I know we'll talk again soon, but thank you.
No worries.
There you are, Emma Franklin-Keogh from Clockwise Credit Union, right in the centre of Leicester, joining us here on BBC Radio Leicester. I'll bring you some weather in a minute or two. It's 18 minutes past 5.